what is important is to ensure that there is enough money to do what needs to be done. So that's why we sit down and actually develop a budget. When developing, analyzing, or evaluating the budget, the work breakdown structure of the operations and activities can assist in the analysis of each activity and can provide information on what needs to be done. So we keep on going back into, your strategic objectives or whatever is sitting in your business plan. And then you figure out how long is it going to take? Who is going to do that? We're looking at do you have the necessary skills in-house, or do we need to outsource experts? When must it be done by? Do you need can one person do this, or you need teams, more individuals, so that we make sure we finish on time? How is it to be done? What equipment do you need? Is the equipment available? Do we need to hire it? What is the best decision, hiring or purchasing this particular equipment? Where must it be done? Do you have the facilities? Do you need to go out there and hire a space, rent a space, or you can do this in-house? So these are some of the questions that you ask yourself when coming up with a budget. In developing a budget, you must remember the following. As I've said earlier on, is it still talking to the goals that you set for yourself, how quickly it needs to be completed. So you look at if the schedule is shorter, do you need more resources, like we've already spoken earlier on? So the longer the schedule, the more overheads you will incur. So you need to make sure that you need to balance. Are you gonna increase the labor cost by hiring more people and try and cut down on your overheads? Hello? Hello? Okay. Is there a question?
Wondering why you're not answering my phone. Ifoni yam andiyivanga benilapha epho. In fact, the time ubusfonela.
All right. I'm not sure who. Dendi, can you please help me mute? I think so. Okay. All right. Like I was saying, when you're evaluating your budget, you look at the cost of the activities if they are related to the expected lifespan. And you also look at the cost of the activities. If they need input from experts, or you have everything in-house, to actually deliver on your set down goals. There are different ways in displaying a budget or income statement. We will provide you shortly with that. So this is a budgeting worksheet that you can use when you actually prepare your budget. And one of the activities that you have, for an example, I think let's just try and do this together here in class. You need to select one of the following activities. It's either is a wedding reception for your daughter and her new husband in 3 months' time, and you have 20,000 rands only. Or you need to do renovations to your house, the kitchen and the outside patio over a period of 3 months. You have 20,000 rands only. Or you can choose an overseas holiday for your own family of 3 in 3 months' time. For that, you also have 20,000 rands only. So, a group can select which activity or project they would like to engage in. So there's tasks that need to be done. You need to draft a budget for the activity you have selected using the format that I've just showed you. You present the budget to the facilitator, so you'll submit it, and then what we can do, you evaluate the budget using your checklist as developed by your group. Maybe we can look at renovations to your house. Over a 3-month period, you have 20,000 rands. I think what we can do here is to think what are the tasks that we'll need to deal with at the beginning, the first few tasks. Anyone who can recommend probably what we'll need to look at first if you want to renovate your property? Do we have any takers?
Hi, Nomisa.
Yes. Yes, Kabelo?
Let me take a shot. I think in 2021, 20,000 no longer means much when you want to do renovation.
No, I think what we can do, let's just leave the amount. I think let's just think about what we the tasks at hand.
I think first you look at, let's say if we take an example of a house, I would say that I want to renovate my bathrooms.
Mhm,
So first I'll need to look for contractors, either plumbers or bricklayers or electricians, depending on what I want to change. Let's say I'm going to change all three.
mhm,
So it would be the first thing. I'm going to look for contractors.
mhm,
Then, after speaking to them, I'll have to decide on the materials that I need to purchase for each type of field: electrical, the lights, and
mhm,
fancy dim light in the bathrooms, and the ceiling if it's going to be broken.
mhm,
Then for the contractors, the tiles, the cements, the paint. Then for
mhm,
the bath, the pipes that I need, the new shower head, and the glass that I need for the shower and the likes. Then
mhm,
we'll have to agree on the labor costs for
mhm,
uh, each contractor. Then yeah, we'll just have to decide on when we are starting. Then on my own, I'll just have to make a contingency, maybe plus minus 15% of everything that we agreed on, just in case there are some spillovers or materials that like, let's say tiles. Sometimes when they insert tiles, some of them break and the like. So you must just have that bit of contingency to buy some.
Okay, yes. And if any, maybe, when you get your electrician or your plumber, how have they factored for that in their thingy? Should any pipes burst in the process or something to that effect? You know, you just make
Yeah.
sure that it is covered somewhere, whether from your side or from the contractor side. You make sure that it
Yeah.
is whatever. And I think another thing we can look at, oh, sorry, Kabel, without cutting you. Were you done?
Yes, and thank you.
Yeah.
Thank you, Nomi.
Thank you so much. And also, if you are renovating a bathroom and there's only one bathroom, sorry, in the house, during the time when these renovations are happening, what contingency have you put in place? Where are people going to bath? Are we going to use, do you need to buy basins or something to that effect if you're an individual who has one bathroom in their home? So those are some of the things that life must continue, but have you planned for it? You don't break down the whole bathroom and the following morning nobody has thought about, so what are we going to do up until this place is ready for us to use again? So yeah, so I think that is, yeah. Thank you, Kabelo.
I, I think I saw a hand from Maxwell.
Okay. Yes, Maxwell. Good evening.
Evening, everyone. So anyway, if it's me, if I have to do a kitchen, looking at the condition of my kitchen, what do I need? Then I'll do my own research, but I've got only 20,000. So I've got a plan for the house. Then I can go to builders where they can do 3D. Let's say I'm changing the cupboards in the kitchen. They can do 3D, and I will have the cost for that. And then if tiles are damaged, then I'll go to CTM and do my own research in terms of the price, or Leroy's, then builders, then compare the prices. Before I do what I call the contractors, and I won't call only one contractor. I'll call 3 contractors. Give me different codes. Then based on the codes, then I'll check which one is the cheapest, and I'll compare with what I get from builders or CTM. And then I will have to at least have money for labor after, like, buying the material to do any renovations.
Yes. Okay. Thank you very much, Maxwell. That's yeah. That's yes. These are some of the things, because sometimes when you want to do these renovations, you're not necessarily an expert in construction. So I've found that places like Builders Warehouse can give you details of the things that you might need to take into consideration, when you're actually doing that, or your bathroom bizarre and the likes. They come in handy in advising, especially if you have a limited budget. So, you're trying to eliminate as much cost as possible, cut down on your cost. Anyone else would like to make a contribution? Or you can even talk about the other ones, planning a trip or planning a wedding, just, to demonstrate how we actually do the planning. For example, if you're going on an overseas trips, you have this budget, you need to figure out if the country you're traveling to, do you need a visa, or is it a country where you can travel with a visa, and make sure you factor in the costs of actually procuring those visas, the flight tickets, the accommodation where you're going, the ground transport when you actually have landed, what activities are you planning to do, your food, general spending money when you're out there. Are you planning to shop? So all those things, the details of how your life will be like when you're on this trip. Do you need any vaccinations? Are you going to places that have yellow fever? Do you need to make sure that you are vaccinated? And that costs money as well, or malaria, taking the medication, the prophylaxis for that. So those are some of the things that you definitely need to take into consideration. Others, even if it's not, it's not paid. For an example, traveling now, you probably be asked for your vaccination, COVID-19 vaccination certificate, and things like your travel insurance as well. When you're at this particular place, if your medical aid will not cover you, then, it's always advisable, even if you have medical aid, to actually take out travel insurance, because your medical aid will cover for this illnesses or sickness when you're actually there. But a travel insurance is broader than that. If something happens, they might even pay for costs of you coming back if, there are unrests in the country where you're at. We saw that when the tsunami happened, it was around Christmas holidays. People were all over the show, but then airports were closed, but some people with travel insurance, private aircrafts were sent to where they were to actually pick them up and bring them home. So those are some of the things. Or if something happens when you're there, one of your family members dies, travel insurance covers bringing them back home, which is a very costly exercise. But then if with travel insurance, it becomes something that they cover. So these are some of the things. Or if you get sick and you're there, then there is also an option that a family member can fly out to where you are to actually come and give you, support in a strange country. So these are some of the things that you need to take into consideration. Thank you very much. If we can move on. Any questions or comments before we move on? Okay.
No, Mr. Just not a question, but a comment, and on the side note, with regards to what you're saying about travel insurance, I remember my banker once informed me that if I like book a travel using my credit card of the bank, they have insurance, and but thank God I haven't used it as yet. But I was just thinking in terms of this COVID when everything was closed and people have had to get private crafts and the likes. My bank said that if I was in that condition, they would have shuttled me over. So I think one must just check on their credit cards what they are eligible for and stuff like that. But yeah, it was nice to have.
Yes, no, it is, and it's not expensive when it's not expensive in relation to what it would cost you should something happen. So I think it's if yeah, it's something that I would recommend. If someone takes an international trip, please don't even think twice, because if it's especially traveling with your family, they have packages, family packages that can go to about just 2,000 rands, and your benefits is like repatriation, 1,000,000 rands, something like that. So when you look at the benefits that come with it, it's very important, that you actually take it without blinking. Just make sure you factor it in. And also it's important what you just mentioned, that the benefits are also linked to the status of your credit card. So just make sure that what you get. So there are silver credit cards, gold, platinum, private, and wealth. You go when you go. So the benefits are not the same. Just make sure that you're very clear what your benefits are, and you are comfortable with what is being covered in that regard. You can even buy it separate. If you don't have a credit card, travel agents can help you to actually, I think there's one called Bright, so you don't necessarily even need to get a travel agent. You can contact them directly and, actually get that kind of cover, which is very important. Thank you, Kabelo, for that. These are the calculations that we usually do on your income statement. So your income statement will start off with your revenue. That's what is not included in there. And then from there, you look, so revenue is just your sales, whatever you're selling, that's what you put in there. The total costs of the goods, general administration, the total cost and building equipment, the total cost of other expenses. And then after you've taken into consideration this, so it will be your total income less your total operating expenses. That will result in operating profit. And then from your operating profit, you take out, you deduct any interest expenses. So if you have overdraft facilities, if you've got loans, if you've got, I think there are kinds of lists, what we call finance lists. It's not something that's a lot out there, but if you have something that qualifies as a finance list, your interest expense, you take it from there. And then that will give you your profit before tax. You do your tax calculation, then that will give you your net profit as an organization. As we said earlier on, where we looked at, when you're actually doing your budget, you look at the benefit of, or do your cost benefit analysis to just make sure that your business is viable. But to take in even further, you do a calculation called the return on investment. It's a return on investment is a calculation to determine if something is worthwhile and paying for itself. We'll do an exercise. We will look at the different, we'll do calculation just now. So what's important in here is that even when you want to make a decision on which investment to put your money in, then you do a comparison by looking at which one is better by doing the calculation, the return on investment calculation. So you can do that as a in terms of showing you a percentage or a ratio. What is the how do we calculate the return investment percentage? What we do, you take, so basically is your profit as a percentage of what you've put in the business. So when you say output, we're talking about the sales that you're going to make or the income that you're going to make, less input. Input is how much money you have, you've put in. So that will give you your profit. And from that, you divide that by the actual investment. So the money that you actually put into this business. And, that will tell you what will be the percentage on this investment. So if someone is selling you a product, so there are products out there, investment opportunities out there, do this exercise and decide then what is the best option for me. So if you can look at the example, the output, the total income that you're going to make is 100,500. But the money that you have, so the total expenses that you would have incurred to generate this income of 100,500 is 65,000. So the difference between 100,000 500 and 65,000 is about 35,500. 35,500 as a percentage of your investment, which was 65,000, gives you as 54.61%. And also what is important is that when you actually get this figure is to also do some research and understand that in this industry, what is the normal return on investment percentage? You can get an investment and it tells you the return on investment is 25% or let's say 15%, and you think, wow, that's great. But what is important, you must always compare against the industry norm. You'll find that as much as 15% looks good, but the industry norm is 20%. So maybe you need to look more to actually see, what would be best. So just a percentage is always best when it is compared to something, So just make sure you do your research and understand what is happening in the industry that you are investing in. Any questions? Okay. Here is an exercise. Anyone who'd like to give us an answer on this? Your sister's t-shirt company has spent 30,000 Rand, has brought in 38,000 rands. Help her to calculate her return on investment for the above scenario. Any inputs? Maxwell, would you like to try on this one?
Oh, okay. That will be like your 38,000 minus 30,000. Answer of that, then you multiply by 100, then you divide it by 38. Then you get the percentage.
You divide by?
By 30.
Okay. All right. Yeah, that's correct. So your total income is 38,000 and your operating expenses is 30,000. So that is the profit you're making, which will be 8,000. And you divide that by 30,000. According to my calculation, it gives you 26.7%. All right.
Yes, 26.6, 27.
Yeah. Thank you very much, Maxwell. All right. So if we can move on now to your personal financial planning. Personal finance covers a wide variety of money topics, including budgeting, expenses, your debt, your savings, your retirement, and insurance. Understanding how each of these topics work together and affect each other is important for laying the groundwork for a solid financial foundation for you and your family. And I think what is important here is to make sure that you are able, when you go into business, it's always advisable that your personal finances are in order, because when you go out there looking for funding, that's what will be taken into consideration. Not necessarily that you have this money, but how is your behavior with money as an individual before someone can entrust you with their money? Excuse me. So it's important that whatever money you have as a person, you take good care of it, so that then other individuals can trust you with their own money. And that way, even when you run your business, you are able, to separate. You don't take the business monies to finance your personal lifestyle. It should be clear from a business point of view, how much is your salary from that. You don't just swipe the business card for, for personal things, but it should be clear. You must draw a salary and manage your salary separate from the business. So your personal expenditure must be financed by the salary that you draw from your own business. Same way with personal finances, you need to have a budget. And
Mumisa,
yes.
maybe just a question on the previous slide. I don't know if this needs a bigger discussion, but it's a question that I have.
Okay.
Let's say you are a sole trader, right? Or even you are a sole trader and you are a principal. You are starting up your own agency. Then you are funding your business. Let's say you say, okay, I'm approximating this year. I'll need 120,000 to kickstart, right?
Okay.
Then 120,000, 12 months goes dry without any income. Then that's your initial investment. Then next year you start, for a lack of a better word, giving loans to your personal business, right? Then do you draw back the money out? Like you're saying, one would take it lightly. It's my money. I'm just going to swipe petrol and buy electricity and grocery, can come against you in the long run. So how do you draw out, especially the loans, not necessarily the initial investment that you had planned, but the loans that you gave to your own business?
Okay. I think what is important is that, even if you're talking to yourself, you have a because when you actually, for example, you advance a loan to your business, you might have the notional interest that you put in there, but if you are going to deduct these amounts, you need to have a supporting documentation as a starting point, that there is this shareholders agreement between the business and myself as a person, as the founder or whatever, so that it is allowed, firstly, and be deductible from an auditor's point of view or from a taxman. I know you're probably not making a lot of money for them to actually dig that deep, but if you start practicing it when you don't have a lot of money, then it's a practice that you will carry through when you're making a lot of money and you are used to this record keeping. And you time, for example, when you budget, there will be times, say quarterly, you have what you say, loan repayments, or every year, depending on the profits, depending on what the profits for an organization. So it's entirely up to you, depending on, on how the business is doing. You tell yourself that there is a loan repayment schedule that we have as a business. So it's either you pay your loan before you actually do dividends. That's how you do it. So you start by doing loan repayments. And it should be clearly reflected on your balance sheet that you have a shareholders loan that's sitting in there, so that when you look at it, you know that your commitments, as much as you have these assets, but your commitments are clearly, because they are your obligations, going forward, so that if someone wants to invest in your business, for an example, they must come in knowing that you have these particular obligations. Because now, if you don't record them properly, it gives the impression that your company, its book value is much higher than it is, because you've eliminated to record this particular obligation. I'm not sure if it answered your question.
Yes, it does. Just one more follow-up.
Okay.
Can you, let's say
okay.
Let's say in that event where your business is not making money and you have an investment, right?
Mhm.
How do you advance a salary loan? Let's say, for example, you have, let's say, two admins that you are working with, and you say, guys, business is not making money now, but in a year's time will make money. I know I must give you a salary of 3,000, but I can't afford it now. So is it possible in terms of business finance to capture that as a loan that you must repay to your employees or yourself, but it was supposed to be a salary?
Okay, so you are where does the loan come from? From you
So
as the
yeah, so you have a business, you have two admins, and you yourself as the principal and as the agent, right? Then you say,
yes.
admins, right now you are joining this business, but I don't have enough money to pay you. So as a
Yeah.
start, give you a stipend, but your salary, let's say, for example, your salary should be 10,000. Right now I can only afford a stipend of 2.5. So I'll owe you 7.5. When the business starts making money, I'll backdate the 7.5s.
Okay, I think that is the offer you're making to them, and um, yeah, I think you what can I say? It would have to, you find a way of spicing it up, because I'm not sure how many people will accept that unless it's family or you're offering some incentives like some kind of shareholding in the business, but because usually when people are looking for jobs, they're looking to be paid. So if the salary is 3,000, then it is 3,000. Yeah, I'm not sure if you even want to go into such complicated transactions, because I think when you're budgeting, maybe rather budget on what you can afford. Yeah, because what if this continues perpetually and now you have these loans, your liabilities keep on growing and growing, and even for you to go out and look for financing, you have these huge liabilities relating to these individuals. I think offer what you can afford to offer at that point in time and not start off building that kind of debt, Personally, I would recommend that. Yeah. But I think another option you can look at, I think relating to your first question, maybe because this is your business, you don't, you probably structure it as much as you're giving it, you're giving a loan to your business for your financials to be more attractive to lenders, looking at it more as an investment into the business, so as capital rather than a loan, because it's your business anyway. You understand what I'm saying? And then you then decide what will be the profit sharing at the end of the day. But having a huge loan account, tends to also make your business not very attractive. I'm not sure if you understand what I'm saying. Instead of classifying it as a loan, maybe you classify it more as equity into the business, as a shareholder's capital or something to that effect.
All right, thank you.
Because it's still your business. Shareholders loan is when there are many shareholders. People want to make sure that their monies are not swallowed by your business. But if you are a sole trader, at the end of the day, it's still your business at the end of the day. I'm not sure if it makes sense what I'm saying.
Yes, it does. Thank you.
Okay. All right. Okay. Coming back to personal budgeting. The problem that stems from not having a detailed budget are that we are faced with so many financial decisions that it is nearly impossible to keep track of and remember everything. The lack of understanding can lead to overspending, debt problems, and even the inability to adequately plan for your future. When you create a budget, then you have a clear picture of how much money you have, what you spend it on, and how much, if any, is left over. Once you can see the inflows and outflows of your money, you can optimize your spending so that necessary items are sure to be covered while cutting back on any wasteful spending that will not allow you to save money. How do you cut your expenses? The kind of questions that you ask yourself. For example, you look at subscriptions that you have. Do you subscribe to magazines that you really have to read? Do you subscribe to any DVD mail rental services, but only watch 1 to 2 movies a month? The gym membership that you purchase as part of your New Year's resolution that you don't use. I know that a lot of people, when Netflix came up, a lot of people moved away from DSTV because I think DSTV, you can pay up to 900 rands a month, especially someone who stays alone, is not big on sports, then if there are people who love just the movies, then a lot of people cancel their DSTV subscriptions and just moved on with Netflix, which Netflix, it's about 150 or whatever, 70, something like that. It's less than 200 rands a month. And then I know there are many people that donate to Vision Active. There is a point in time that you need to do a reflection and ask yourself, really, do I need to pay this amount on a monthly basis, or can I look at it? Because just by paying the subscription doesn't mean you are really going to the gym. So, when you're ready to go to the gym, then maybe you can enroll at the gym. But don't do it out of guilt. Do it because you want to commit to it. Yeah. These subscriptions can slowly drain hundreds of rands every year. Individually, they don't seem very costly, but over time, many of these underused subscriptions cost a lot of money. What are the other things you look at? Avoid banking fees. Banks are regularly charging their products, and you may be paying a monthly fee without thinking twice about it. And then on top of monthly fees for accounts, watch out for fees associated with overdraft protection, paper statement, or excessive transactions. So you plan how you transact because, there is a fee that banks charge when you transact. Is it necessary to get that proof of payment? So don't just when you load a payee on your bank, for an example, automatically ask for proof of payment. If you're paying, if you're not paying business, maybe you can avoid it. If someone, you can just send a message like, please check if you received it. When you're paying monthly allowances to your children, you don't need to be putting a proof of payment. They will let you know when the money hasn't come through. So all those things, just be, understand, analyze your bank statement. Look, because sometimes your bank charges can go to almost 1,000 rand by small little things that you do. But if you plan how you actually transact, it could save you a whole lot of money as well. And also, when you do your pay and clear, it costs you more. Rather, you plan your paying in advance and make sure that if something is due month end or the first, you do that payment. If it's due and needs to be cleared by the first, then process the payment 2 days earlier if it's going to a different bank, because those pay and clears and all those things is something that takes a lot of money from your bank account. Pay your bills on time. That's very important. It is easy to forget a bill and you end up with a late fee. And over and above, the late payment, it's something that goes into your credit history. It affects, even if you are a day or two late, some institution that lateness will reflect in your credit record, and there you will only pick it up one day when you're looking for financing, like, you know what, you're not a good payer, and it becomes a problem. So pay your bills on time to avoid the late payment fees and also to avoid denting your credit record. And if you have trouble keeping track of due dates, check into automatic electronic payment plans available online. You can have scheduled payments that on this particular date, these are my bills that I need to be paid. Of course, make sure that there are funds available in your account, because it's another thing as well when, especially debit orders. When they come in there and there are no funds, the bank will charge you for that as well. So it's about planning and understanding what are the cost drivers when you do your banking. Keep eating lunch out at a minimum, or because it can be costly, and for many business professionals, it is almost a necessity. So do you know that spending 100 Rand a day on lunch while at work can cost nearly 2,600 Rands per year? And if your spouse does the same, 5,200 Rands just on lunch. And you should try cutting back on lunch, because half the time you're not really sure of exactly what went into that sandwich. Fine, it could be a chicken mayo, but maybe it's a full cream, whatever mayo. So from your health point of view, but you could have made a much more healthier snack at home than actually, buying something that you're really not sure what went into it. And I think what you could do, you have those days, let's say Monday to Thursday, you will bring lunch, or 3 times a week you bring lunch, and then two days in a week you buy your lunch. It's also nice to have an incentive when you do something. You look forward to those days when you're going to spoil yourself, because you can't always, it's not easy to deprive yourself of things. Like I remember with kids, when my kids were younger, tell them that we'll pack lunch, and then on Fridays the tuck shop had nice snacks. I'm not sure, sloppy joes or whatever. So that was the whole point, is that during Monday to Thursday we pack a healthy snack, and then at least on that particular day, the Friday, there is that incentive that you'll get money and you buy the sloppy joe at school. So these are some of the practices you can do for yourself, because perpetually depriving yourself as well becomes unsustainable. So just do these small things and then reward yourself at some point in time. Any questions?
Just a comment on another thing that depletes money quick. SMS banking. Without realizing, a month you can spend even close to 300 by just paying 30 people using SMS banking, especially with construction and transportation, and majority of the time you outsource like labor, or you get guys on the streets, and because you either give them cash or send money or e-wallet, and that's like 10 Rand per shot. So that can really, really, really take up a lot of money.
No, that's true. That's true. Any other practices that other people have experienced that slowly but surely can hit your bank balance? Any other what can I say, practices that you've been exposed to? Okay. All right. Getting out of debt. Yeah, I think as South Africans, we are in a lot of debt. Those were the reports even before COVID happened, that we are a nation that doesn't save a lot. We have a lot of debt that we've been exposed to. And I think the National Credit Act came into effect to try and deal with this problem that the country is facing. So even after creating a sound budget and cutting unnecessary expenses, you may still find yourself with lingering debt to get rid of. Using credit and taking on some debt itself isn't necessarily a bad thing. And that being said, if you want to build a credit profile, you know, you need to have some kind of debt. But, you know, what is important is that you should plan it and not expose yourself with debt that you won't be able to actually be able to pay, because that's the thing. Because at the same time, if someone wants to lend you money and you have no credit, you know, you don't have a credit rating, it looks like you're putting your money in a black hole because you have no idea how does this person deal with debt. So anything can go. So, you know, keeping that credit card, but I think what is important with money, in whatever you have, even if you have lots of money, you need to have discipline. So even if you have that credit card, make sure that you service it well. Whatever loans you get, make sure you service them well, you know. But yeah, choose wisely and not get into debt that is going to be very exorbitant and become unmanageable as well. So when you can't keep up with your payments, or you borrow more than you can afford to pay back, you could be in trouble. And I think exactly that's what the National Credit Act was looking at, borrowing more than you can afford to pay back. One of the most important steps in getting out of debt is pay more than the minimum amount due each month. Because when the bank, for example, gives you a loan, they also need to make money. So the longer you take to pay your debt, and the minimum amount is what they require for them to continue maximizing their profits. If you can pay more than the minimum amount, it means that less interest being charged to you, because the interest is calculated daily by the bank as much as you will see it monthly on your statement on the outstanding balance that you have on that particular loan. So if you can pay it off quicker, paying more than the amount due, will help you much better. Because yeah, because what happens is that, you know, it keeps on compounding. You know, they charge you and they put you in your account, the interest one, they charge you interest, it forms part of your debt, and next month, you know, it keeps on. So it sometimes, when people don't understand why I've been paying for 15 years, but this is still the balance that I have, is that the less money you pay in, whatever is left there, they calculate the interest on whatever is sitting in there as your debt. Because as soon as they calculate the interest, it forms part of your debt, and the next interest they will calculate based on that. So it's important to understand this, whatever, the same way that when you invest and save your money, there is also the nice thing that is called compounding interest if you keep on keeping your money, because as the bank, so on the saving side is a good thing, but on the debt side, try and pay the debt as quickly as possible. Paying the minimum amount will end up costing you thousands of dollars or rands in interest over that period. One of the most costly mistakes you can make with credit cards is getting into the habit of only paying the minimum amount due each month. I think we've already spoken to that. You know, yeah, you can find yourself unable to keep up. I know a lot of people, especially when people start working, not really understanding, you know, how the credit card matter it works. Yeah, it can be high. It can be high. I think currently the banks, they charge up to 17%. As far as credit card balance is concerned. So, you know, try and make sure that you understand what that means. If you really need of money, compare the various products that the bank has. Maybe a personal loan is better than taking a credit card or an overdraft facility, but make sure, and currently it's very easy. The rates and the fees are available on the websites of the various banks. So go in there and do your comparison. What is the best way of, you know, what kind of debt, if you have to take that debt, but do your exercise and don't be, you know, excited, because sometimes we allocate prestige to owning a credit card. What people don't tell you is how painful it is at month end, you know, when you have to repay that money that the banks lend you via the credit card. Another, okay, yes.
We get to insurance, this getting out of debt.
Okay.
I've recently just had a challenge with one of the financing houses. It's not a bank, it's these car dealership financing houses. You know, like I was saying, normally the bank, they would charge you interest on capital. So what that financing house did, after we agreed on the term of payment, let's say 72 months, they just took that interest, extrapolated it, and fixed it. So meaning whether I put extra or not, the amount is already fixed with that interest in it. You know? So that's very funny for me because I had always known that no, there's always the capital or the settlement amount, then the interest. If I want to settle, I'll get the settlement amount. But unfortunately, that contract, you know, when you sign an excited, you don't know what you are signing up for. So like they charged all the interest on day one. You know?
So they charged it in advance.
They charge the interest in advance. So one must be careful when signing these contracts and really take time and read through because you want to get out of debt, but the type of contract that you put yourself in is very dodgy.
So was the interest rate fixed? Because I'm asking myself, with interest rates being cut and going up, how are they going to deal with that? Was it fixed?
Yeah, because it was a car, the interest rate was fixed. So on day one, they just took that capital, let's say 120,000, multiplied by what, then boom, that's all of a Sunday, 275,000 that you must pay over a period of 72 months, you know?
Wow.
So go and want to settle, but they say, no, this is the loan agreement. So they charged all interest on day one.
That is very interesting because even when in some institute, as you were saying, it's not a bank, that's probably different. Because I know with banks that even when you get a fixed rate, it's for a fixed period. They usually, because now they calculate their risks, that now I fix this, and what happens if they, with there are times where things happen out there and the interest rates go to levels you've never thought of. It means the bank will lose out. You understand what I'm saying? Because they fixed this for 72 months. So it's really interesting that particular arrangement. And also, because interests accrue on a daily basis. So it's very interesting, how did they account for it on the other side? But I think it's something that even if I don't know, I think it's something that you probably need to investigate further. If it's not going to take up too much of your time. It sounds very peculiar. Anyone around us who have come across a situation like that? Anyone in the class who probably had a similar experience or knows of something like this? Okay. All right. Thank you very much, Kabelo, for sharing. That's very interesting. National Credit Regulator. Oh, yes. Yes, please go ahead.
Hi, this is Tulani.
Yes.
I was just listening to Kabelo, and in my accounting knowledge, because that's where I'm based, that doesn't sound legal. Because interest, there's a loan principal, and then there's an interest. So you need to separate. You can't charge interest on interest because what they're doing is almost like interest on interest. They're marking up the loan in principal amount with your interest, which I don't think that should be done. Personally, but obviously, they can investigate and look at the contractual, like we did with contracts. Probably the intention there, that contract can be challenged as well, because that's sneaky. It wasn't explained in that terms or something, and you were not aware of that.
No, thank you, Tulani. I think just maybe a phone call to the National Credit Regulator, Kabelo, just to get a view. Yeah, thank you. Yes.
I think on the scenario that he just brought up, Kabelone, some dealership, then they will say, okay, fine, for 48 months, this is how much you are going to pay, and it's a fixed rate, irrespective of the interest rate going up or down. Then after that 48 months, then it's up to you if you're going to buy the car or not. So I'm not sure about his scenario, like what happened there. But if it's a deal like that, like, okay, fine, you take this car for 3 years, this is the fixed rate that you're going to pay, irrespective of interest rate will go up or down.
And yeah, thank you very much. Because for me, what I'm thinking is that even the dealership, they are not financial service providers, so there is a financial institution behind that, and they have the responsibility to explain. It still shouldn't be a surprise. Because I know that sometimes those are where you have balloon payments and they kind of fix, but yeah, it still sounds very, very strange, I must say. Because even if
What they're doing, sorry to interrupt, what they're doing like in-house finance with their terms and conditions. So people sometimes they get excited because I know I want that Ferrari or I want that Audi or Mercedes Benz. Then they go for it. Then you look at the period, okay, fine. It's just 3 years. Then like I want this car. Then if they give you that deal that okay, fine. In this 3 we in-house, then this is how much you are going to pay, and it's a fixed term. Irrespective of the interest will go down or high. You just pay a fixed rate for the period of 3 years. Then after 3 years, you're out of the contract. It's up to you to continue or not.
And I think before you take an in-house deal, please go check with your bank first, because they have a better understanding you. The in-house deals, they sometimes tend to be more expensive than your normal bank would do for you. You've been with them, they've known you for probably 10, 15 years. Those in-house deals in dealerships, I think they probably target people who are struggling to get credit, and they tend to put a premium on it. But yeah, just I think for future purposes, before you can sign, even if it looks very nice, take it to your bank as well and just see, get a quotation from the dealership and take it to your bank and see what they can offer you. But it's still, yeah, I'm sure there are many Credit Act regulations, that are compromised.
The strategy that they're using now, I know, sir.
Yes,
I can hear you. They will say, okay, fine, your insurance is included, like your dent and scratches is included, like your tires is included, like it will sound like a good deal. So one will just go straight with, like, without thinking or going to the bank and do a proper research, because if the insurance is included on that fixed term, the tire burst, dent and scratches, are just oil, petrol, and go.
No, yeah, that's true. Thank you so much. And with your bank, sometimes if you finance your car with your bank and your home, you could get a very good deal if you have a comprehensive cover for your home and your vehicles and whatever, far much cheaper than just what a dealership could give you. So just they make it sound interesting and make it sound like no hassles. You don't have to be calling around for quotations, but the cost at the end of the day, you're stuck with that for 72 months, for an example. So yeah, thank you very much. Just make sure you shop around before you sign these deals. An extra 300 Rand could make a huge difference. You don't have to pay it if you don't have to pay it. Let's try and, know that there are different options out there that you can look at. But anyway, thank you, gentlemen, for sharing and your inputs. The next important financial aspect of your financial planning is insurance. You create a budget, you cut expenses, you eliminate debt and credit card, you start saving for retirement. So you are all set. You've definitely come a long way. There is one more important aspect of your finances that you need to consider. You've built a solid financial footing for you and your family, so it needs to be protected. Accidents and disasters can and do happen, and if you are not adequately insured, it could leave you in a financial ruin. You need insurance to protect your life, your ability to earn income, and keep a roof over your head. One of the important, I think, on a day-to-day basis, and I think most of us have realized, the importance of health insurance, especially during the time, COVID, that we have been exposed to. Your good health is what allows you to sell houses and earn more money. If you come down with a sickness or have an accident without health insurance, you may find yourself unable to receive treatment or even in debt to the hospital. Unfortunately, the environment of the real estate does not always bring health benefits. While it may not be cheap, the fact remains, what do you have if you don't have your health? Even a basic hospital bill without insurance can run into thousands of rands. So, maybe when you look for your health insurance, you look at options of just having the hospitalization and have a kitty where you do, we do our monthly savings for over-the-counter expenses, your doctor's visits, but hospital bills are exorbitant. They charge you for giving you a facial tissue to use to sneeze. They charge you each and everything. You must, if you've been to hospital and get a bill, you must look at those bills. They charge for each and everything, even things you could have brought yourself. If you ask them, nothing is for free. Somebody recorded that packet of facial tissues that they gave to you. And they're not going to charge you the price you would have paid when you went and bought them at Discount or Clicks. So please make sure that you have, hospital insurance, just the hospital coverage. If it's that difficult, you can't afford to have a comprehensive medical insurance, but just find ways of ensuring that, you can cover your hospital bills, because I've seen situations where people take years and years to actually recover from hospital bills. And so I think even during the COVID, medical aids were less strict, especially when you were looking for the medication, the over-the-counter, because I think when they thought about the cost of you being admitted, they'd rather pay for the vitamins that you're looking for, and all the other things that you can use to boost your immune system. So health insurance is very important, and if you can, please try and find as a minimum a hospital cover if you can't have a comprehensive one. Life insurance, this type of policy is more important if you are married and have children. Your life is valuable because it's what allows you to work and earn an income to provide for your family. When you are gone, you will create an income gap, which could put your spouse and children in financial trouble. If you do not have current life insurance, your best bet is to check with your employer first. Many employers offer a basic life insurance as a benefit. Some even allow you to purchase additional cover at a very affordable rate. Outside of employer plans, there are hundreds of insurance companies that can provide the right coverage for you. So that's very important. Please make sure that, especially if you still have debt, you can, I wouldn't recommend you not to ever have this, but if you have debt, definitely please make sure that you have life insurance that will make sure that you know, your bond is covered where if you should pass on, and you know, your family still has a roof over their head. So don't just have a cover that says will pay out, but get those ones that are specific, because when it pays out, it might find people with other, you know, needs and challenges, and not go to your bond, which you have paid. It took so much of your time and energy to invest in it. So just have those ones that are specifically to cover, you know, the bond that is outstanding on your property. That way you are covered, rather than having it paying out to an individual, and the next thing the individuals find themselves still exposed to the house being repossessed, for an example. Your motor insurance as an estate agent, your vehicle is your business. Without a car, you're going to find it impossible to function in your full capacity. Therefore, the most common reason to have motor insurance is to cover the replacement of an expensive asset and also your tool of trade. Okay, this is a personal financial planning. So I think what we'll do here, this exercise is an individual activity where, you know, you look at what you believe is critical to have as an individual, what you consider to be a nice to have, and you motivate why, you know, it is in that order of priority for you. And I think another insurance that we might talk about motor insurance, but I think it's also important to have, you know, you make sure, but usually when you still have a bond, you will have that that cover for the structure. What a lot of people miss out on taking is the inside contents insurance, the insurance that covers the contents of your house, you know, the TVs, the furniture, you know, everything that you have in your property. I know that during when we had hectic load shedding, individuals with switch on stoves, you were in the middle of cooking, and there's load shedding. People forget to switch off the stoves, and the electricity comes back in the middle of the night. The food continues to cook, you in the bedroom far away from the kitchen. By the time you're alerted that something is happening, damage has already been done, you know, and you didn't show the contents of the property. It become, because the bank insurance usually covers the structure and the permanent fixtures, you know, of the property, but the contents you need to take out a separate insurance. You can still take it out with the bank, but just make sure it is clear you have what is this? An insurance that also covers the contents of your property. Any questions, comments before we move on to taxation?
Hi, yes, I do have a question. It's Tulani again.
All right, yes, Tulani.
Okay, I just wanted to ask on the legal insurance. Is there a particular legal insurance or legal aid for estate agents?
I'm not sure if specifically for in terms of what when you say legal, you mean in terms of you being sued?
Yes, being sued and probably maybe having oversight
Okay.
of certain things, or even maybe taking a tenant, for instance, to account at court and stuff like that.
Okay, all right. When you want to take people to court, I'm not. Joseph, are you still with us? Okay. I'm not sure specifically for estate agents, but what I know, when you're running a what can I say? When you're running a business, it's important. It's something that probably should have mentioned, to have a professional insurance. For example, I know that places like if you're a engineering company, you have to have the professional registration, and that gives you access to, that allows you to be able to have, insurance for the business. Should something happen, then professionally you are covered, or let's say there's oversight that happened, then you are in a position to be able to, it's either you defend, or you can execute some payouts. Some professional insurances are for ensuring that when I know your question was specifically for legal, but some are more for you to continue, because as an estate agent, you're the individual who actually goes there. You need to literally work. So if you can't earn income, there are insurances that augment your income. If you are incapable, you are temporarily incapacitated to pay to perform your duties and earn an income. But from a legal point of view, I'm not sure if it is specific to to estate agents, but I'm sure you can look at insurances that can cover you in cases, coming with, from a professional point of view, in cases of what can I say, oversight, as you said, that in cases of you being sued, what kind of covers can be in there. If there's none that is specific to estate agents, the insurance companies can advise what would be best suited to ensure that professionally you are covered. Because even doctors, they take that out, that in cases they are being sued, it might be viewed as negligence, but for them not to, to be personally exposed, they take those kinds of covers to protect their businesses and make sure that if they are found liable, they can be able to take care of whatever comes their way. But it's something that I'll make a note, and probably next week when we meet, I'll investigate it further if there is something specific to estate agents.
Okay, thank you. No, yes, yes.
Yeah.
It
All
makes sense. Thank you.
All right then. Thank you. Yeah. So basically, when you run any kind of business, it's important, just as a general thing, to make sure that at least, especially if it's the risky, I guess everything has a risk attached to it, but explore the professional covers, the professional insurances that cover the profession that they cover the business that you are in. Thank you. Any other questions or comments?
Just a comment on what Tulani was asking, but this is the scope around this is around rental. When we went for that Gauteng Housing Rental Tribunal, they advised that there's no need to get lawyers and the stuff, because according to their experience, lawyers will come there, speak for 1 hour, and the likes, charge you per hour, charge you for emails, because they say that at the end, it's the Gauteng Housing Rental Tribunal that makes the decision. And they said that you personally, it's enough as long as you can have your proofs and the documentation that they need, you can make your own case, But I guess those are for smaller cases. Once you go beyond the tribunal, then I guess that's where now you will need those legal expertise and everything like that. But they said, first instance, don't get legal advice, come and consult with them and everything, because by the time you finish that thing, you would have spent so much on legal fees.
Mm-hmm.
Yeah.
I think Tulani, my understanding of your question was more when you actually become liable, because he mentioned something about oversight when it is your fault. Now the ruling has been done.
Okay, all right.
Yeah,
right.
The ruling has been done. You found to be at what? Let's say you're doing commercial space things. You have a client that's looking for 5 floors in a commercial building, and because of an error on oversight, they lose the opportunity because you did something, the opportunity to occupy that building. and find that this building was facing the main street. It was, you know, the hub of Wara Wara, and they come at you and say, potential loss of income. Now I still haven't resumed my business because you couldn't move there. You know, those kind of things. Those, yeah, when you get to corporate, when you deal with corporate clients, they have a big checkbook. They can take you to task. So I think, yeah, Tulani, am I correct
Yeah.
that I interpreted your question correctly?
Yes, you
Yeah.
did. But thanks to Kabel as well.
Yes.
I guess we tend to forget as well with other minor or immediate issues that we can actually have other less expensive means to deal with the matter. But yeah, thank you.
Thank you,
But
Kabelo. Thank you, Tulani. Yes, Kabelo?
I think it's worth investigating to what extent does the Estate Agent Affairs Board cover the estate agents, because I know that in some instances where the estate agent is found to be in breach of something, you know, the Estate Agent Affairs Board takes something and covers that. I'm just not sure of the exact details, but I remember we once had a conversation to that regard. I'm just not sure what estate agents are covered for inside the EAAB.
Yeah, because the subscriptions must go towards something, right?
Yes.
The fees that are annually paid. No, we'll have a look at that. I've noted these two questions, and then on Monday I'll try make sure that we address them and just give you more information on that. Thank you, Tulani. Thank you, Kabelo. We're gonna touch quickly on taxation. The first tax we're going to look at is the personal tax in real estate environment. It is important to note from the outset that this section deals solely with the registration as an employer for tax purposes. No matter which form of business you have decided to adopt, whether it is a company, a closed corporation, sole proprietorship, or partnership, and if you intend or have already engaged employees to work for you, you will need to register the employees for tax purposes. So the rest of the information is exactly how you can do that on the SAS, the South African Revenue Services homepage. The form EMP 101E is multifunctional. By completing and submitting the form, you will not only be registering as an employer for tax purposes, but you will automatically be registering in terms of the skills development levy and in terms of the requirement of the unemployment insurance fund. Any questions on that side? Okay. The next one we're looking at is the principles of the value added tax, which we'll refer to as VAT, is a government taxation levied on all businesses in South Africa, whose total... Hello, yes, Kabelo?
Sorry to take you back. Maybe in terms of that, now that name ran away, the skills development levy, that one. Maybe employers that are here right now, they can tell us how to access that, because hey, for some of us who have found it very difficult, it comes in a form of a tender or something like that. You apply. It's not, it seems as if it's not automatic. I had thought that automatically you can claim 1% towards the development of your employees, and but it has proven to be otherwise, or maybe it's perhaps I'm not very affair with it. Perhaps employers that are in here who have tapped into that fund or that levy can just perhaps advise on how efficiently we can access that.
Anyone? Theo, is Theo here with us? Hi, Theo, or anyone from Remax probably who has an understanding of how, if there's any dealing, they have any dealings with the skills development levy? Okay.
We'll
Yeah.
tackle it another day.
Can I just make a comment on my experience with SARS and CETAs? No? Is that a company needs to be registered with a CETA, because the levy is to encourage development and training, etc. So for that to be the purpose of you claiming for that levy, you it needs to be monitored, and this is done via CETAs, as far as I know. Yeah, so that's where maybe the challenge comes in, because the levies are distributed only via the CETA.
Okay.
SARS.
So SARS collects it and they are used to fund the CETAs.
Yes. So, for instance, there's a company I worked for. It's a large FMCG company. That we had trainings done for pickers and so forth in the company. So our HR department had similar guides like we have here, right? From a CETA guided point of view, so they could see that these particular skills will be imparted to these people. Then we get quarterly or every 2 months, I can't remember, but there was payments to our company. Based on that, our HR could prove that we will train these people. We have facilitators, and then they approve the material, and then based on that, we could claim from SARS, because SARS would not pay unless the CETA has approved you. All the payments happen via CETA.
Via CETA?
Yes.
Okay.
All right, Mr.
Yes, Maxwell.
Yeah, just to add on what Tulani was saying, in order for a business to claim those levies, you need to enroll like your learners. And those learners, they need to finish training. Then they need to be like found. The competency must be like found, because what's the use of enrolling the learners and then there's no competency, there's no certificates. So if there's no certificates, you are not able to go to claim for those levy or for the grant for the particular training that you enroll at a certain CETA. Yeah, so those learners, if you enroll them, they say it's a CETA, they need to finish the training and then you need to have a proof. So if there's no certification, you're not going to claim.
Okay, all right. Thank you very much, gentlemen, for that input. Yeah, so I think, Kabelo, we just need to research further and just see, how we can take this forward. And probably can, Kabelo?
Sorry, I lost connection. I lost the last part of the comments by Tulani.
Oh, okay.
I'll just rewatch and get them.
Okay, all right. Yeah, I think the essence of both what Tulani and I think Maxwell said was you must demonstrate that you must register with the CETAs and make sure that you get candidates or learners and demonstrate that you train them and they successfully completed the training. So if there is a criteria of evaluating their understanding, like for example, is there an assessment that is done? But I guess you will get, once you register, you will be, it will be communicated to you in terms of what are the requirements for you to qualify. But I think the reality, Kabelo, I think that's the part that you can, it seems like you can't go around actually going to the CETAs and bidding for the work, lack of a better word. You need to apply, to a certain extent to the CETAs, and they assess if you meet their requirements.
All right, thanks.
Okay, thank you. All right. Yeah, we're still on the value added tax. VAT and transfer duty are mutually exclusive. So if you pay VAT, you won't be paying transfer duty. If the seller is a vendor, meaning that you are registered for VAT purposes, VAT will be charged on the transaction and not transfer duty. If the seller is not a vendor, transfer duty will be levied on the transaction and not VAT. If the purchaser in a transaction is a vendor, then the VAT can be claimed on the transaction, but up to the amount of the transfer duty that would have been payable, or if you were going the route of the transfer duty. That's what you can claim from the receiver of revenue within a 2-month period of such transaction. The 2-month period is usually the period where you're supposed to submit your VAT, the VAT claims with SARS. So every 2 months, you complete your VAT return, you put in there your output VAT and your input VAT, and then do the calculations and see if you still owe something or anything is due back to you as a vendor. There are 2 forms of VAT registration. The one is compulsory. This applies to persons who runs a business whose total value of taxable supplies or taxable turnover exceeds or likely to exceed 1 million in any 12-month period. Although you may not qualify for compulsory registration at present, as the year go by and business grows, you may exceed the 1 million threshold and you will then be required to register. There is also a voluntary option of registration. Under these circumstances, the VAT Act allows a person to register their business even though their turnover does not exceed or is not expected to exceed 1 million in any 12-month period. This is the information that you can use when you want to register as a VAT vendor. These are the sites you can go to and the processes that you need to follow. Any questions so far? Okay. Why do you think it's important, just for us to have a discussion around VAT, why do you think it's important to register with SARS as a tax-paying entity? Or without going in there, because I think this one is generic on just paying taxes. Why do you think it's important to register for VAT? Maybe let's ask that question. Do you think there are any benefits for the VAT vendor? And whilst you're at it, if you've you are a VAT vendor, what experiences do you have? Maybe the downside of registering for VAT? Any takers on that?
Hi, Misa.
Yes,
I'm not VAT registered as yet, but from what I heard, the paperwork of the 2 months of submitting for VAT is a headache. So that would be the downside. I don't know any upsides as yet because I haven't been there.
Okay, anyone would like to implement the upside? They say, for
Yes,
example. Okay, please go ahead.
Oh, sorry. I wanted to say some of the advantages is that some companies prefer to work with VAT registered companies. Mere fact, just to make it easy with the input VAT in claiming the VAT. So it's just a preference on their side. And then the disadvantage that Gabelo also mentioned, it's not simple to calculate at times VAT and what's vettable, what's not vettable. and you could get yourself twisted there if you're not well versed with VAT laws as well. Yeah.
Okay, thank you for that input. Yeah, thank you, gentlemen, and you're absolutely correct about that. On the other side is that on the advantages side, when do you know that as a business, when you VAT registered, rather than you just coming up with, like, let's say you're looking for investors or you're looking for funding, the fact that you registered, at least someone is getting comfort that in a way your numbers have been looked at by SARS. So whatever you are presenting to them, they get comfort and feel it's more credible because SARS is continuously looking at what's happening in your business. And yeah, SARS, they don't play with collecting their revenue. Another upside is that because of this 2 months, so this is all taking in, assuming that now you've mastered the art of this admin work and everything. That 2 monthly period helps you to get money back into your business rather than waiting for 12 months. You know, if it works in your favor, that is the advantage that it can come with. But the disadvantage, I think, is exactly that, because on the other side, for a small business to actually be paying something out on the, you know, it could strap your cash flow. So yeah, it's a challenging thing, and you find that many businesses at some point they have that difficult conversation with SARS, especially when it comes to VAT. I think calculating the income tax side of things, it's much more simpler than the VAT, as already mentioned. Yeah. So I think the whole point of us discussing that is understanding that, you know, these are some of the things as a business owner you will need to take into consideration if you're not in a position to deal with it, but at least make sure you get someone to advise and handle your VAT issues, because SARS, once you're in trouble with them, it's like that those loans where you get a loan and you know, you don't know why you're not finishing paying this debt. SARS, once you're in trouble with them, it's very difficult because they hit you with interest. They hit you with a penalty, and then they hit you with interest, and you know, it feels like you're spinning. Businesses, I mean, we've known even artists. I think artists are some of the people that have been hit hard because individuals go out there and they sing, they're not thinking about, you know, all they do is collect their money, and then 5 or 10 years down the line, SARS comes and like, okay, I need my portion. And some of them that bankrupts them. So it's a very important aspect of the business that people need to make sure that they take care of, or they get proper advice in this regard. The time now, it's 7 o'clock, and the section on taxable supplies, I think let's finish that up on Monday, because it goes into more details. The zero rating, what is exempt, and all that stuff. So I'd rather we deal with those when we resume on Monday, as it has already been mentioned that it's one of the challenging things. You do the work that we do here is not make you an expert in VAT, but just for you to have a high level understanding of when you structure your business, what responsibilities or potential commitments or liabilities you might be exposed to. On that note, ladies and gentlemen, can we end here tonight? Are we all in agreement?
Yes.
Yes. Before
Yes.
I go off, one thing I wanted to mention on the side, especially on your personal budgeting, is to remember that when you get your salary and you pay, the taxman has already taken their portion from your money. You pay your debit orders, your insurances, and whatever. Please, please don't forget to pay yourself. When I say don't forget to pay yourself, you need to take money from your income and put it aside. Because if you just pay your debts and you think you've worked, then the reality is that you are living from hand to mouth. The whole point, even if you're not running a business, even if you're not running a business enterprise, but you need to see the profits of what you're doing. So getting a salary is one thing, but putting something aside. There's a book I once read that says The Richest Man in Babylon by George Clason, where it says you need to pay yourself 10% of your gross salary. And the rest, 90%, should go to everybody else. When you think about it, 10% is not that much. I would like to leave you with that note this evening.
Can I ask a quick question? Sorry.
All right, sure.
Quick, is there a learning guide for real estate practice?
Yes. Yes.
I'm not seeing it on the LMS, and I'm not seeing module 2 and 3, but that I spoke to Rena, and I don't know what Monasi did, but I asked Rena to send it to me on WhatsApp, module 2 and 3, but I don't have the learning guide either.
Okay. Thank you for bringing that up. We saw your messages. What we pick up is that sometimes somebody loads, it doesn't come through. So we as the facilitators, we're going to have a meeting latest tomorrow morning. We will all stream, we will all sit in, someone goes in there and we check that we all see exactly the same thing, because these documents were loaded, but for some reason other individuals can't see them. We need to get to the bottom. So this tomorrow morning we're gonna all sit, the four of us, Rena, myself, Kabelo, and Monase, our IT guy, and we compare what are we seeing on this LMS, on the LMS system, and if there are some, then we can go to the root cause of why certain things are not going through. Our sincere apologies for this mishap. I know it's frustrating if you've planned that you're sitting down now and doing some work and you can't find a document, but we'll definitely, by tomorrow, this will all be sorted. Please receive our apologies for that. We've already had a discussion about it later this afternoon.
Okay, thank you.
All right, then. Thank you. All right, ladies and gentlemen, please